as far as economic news goes is this consumer price index report. So the consumer price index kind of sent people on a little bit of a run yesterday. There it is. So the news, you know, I usually kind of bash the talking heads on the headlines because they always focus on just one of the numbers, and the reports are way more nuanced than that. Consumer price index for the year is 7.5%. And so you've been seeing all these crazy like reports like that's the high. And it's the highest since like the 1980s. Like when I was a kid, I remember this was like in the news nonstop. People were paying over 10% interest on their mortgages and stuff like that. Inflation was out of control. But this report also comes with the more volatile food and energy pulled out. And you never see those headlines unless you actually come here and look at the results of the report. But I got to say, usually when you pull out the more volatile food and energy, the number gets more tame. 6% for the year over year is not tame at all. In fact, it was higher than what was expected, 5.9%. And so that caused a lot of folks to question whether the Fed was going to stay measured or whether the Fed's going to get more aggressive. I think a couple weeks ago, we talked about the Fed being fairly transparent, which is a lot different than it was, say, 10, 15, even 20 years ago. The Fed was not transparent at all. They would just surprise these changes on you. Now they're kind of forewarning everybody about what the heck is going on. And they forewarned us that in March, they'll probably do a 1/4 point interest rate hike, and they'd probably start to slow down their bond and treasury and mortgage-backed security bond purchases, if not turn off the spigot altogether. So Wall Street had digested that and was like, cool. Well, this number on Thursday got people guessing, and they were thinking, is the Fed going to be more aggressive than what they advertised? And then today we're seeing that, people probably don't think that's true. In fact, one other thing that people should, I'm not sure our viewers pay attention to, but they should, is the bond purchases, right? This gives me an insight as to how investors view long-term inflation, because there's the 10-year bonds and even the 30-year bonds. And if we thought there was any sort of long-term inflation that was going to be up in this, 6-7% number, those numbers would start to go up. And they're still around something that's quite digestible, like 2%, which is the Fed target for growth for the US. So, is this inflation thing transient? I think so. And so do the bond investors, although we don't know. I mean, we're only predicting, but a lot of people don't pay as much attention to these bond auctions. And remember, all the markets and all the economies are all interlinked. So even though we trade equity options, we should be tuned into the equity markets and the bond markets. And for that matter, foreign exchange currency trades too. Just keep a pulse on everything.